Welcome to the Introduction to Forensic Accounting class. My name's Dr. Bob Minniti. I'll be the instructor for today's session. I do have my doctorate in business administration. I'm also a certified public accountant, certified forensic accountant, certified fraud examiner, certified valuation analyst, and a whole bunch of other certifications I've collected over the years, including being a private investigator in the state of Arizona. I've been doing forensic accounting and fraud examinations for decades, and so I've got a lot of experience in the field that I'm hoping to share with you today. And so let's go ahead and get started and talk about our course objectives. Now, one thing to remember, this is a entry-level class. So, we're looking at basics and giving you an introduction to forensic accounting. If you've been doing forensic accounting for 30 years, this will be a refresher, but you probably won't learn anything new. But for those of you who are thinking about getting into the forensic accounting field, this is going to be very important for you. So once you complete the class, you're going to be able to recognize what a forensic accountant does and identify the professional associations and designations and certifications in the forensic accounting field that can help you get started, can give you a leg up, or can help you to show that you're an expert in the field if you're going to be testifying in a court of law. So if we're going to start, we should start with a definition of forensic accounting. And I'll be honest, this is my own definition of forensic accounting that I tend to use. And a forensic accountant is a CPA who uses statistics, proven research investigative methods, and proper documentation of evidence to research the facts of a situation, which are then presented in a formal report that can be defended in a court of law. Now, a couple of key things with our definition to forensic accounting is one, we have to be, forensics means we're dealing with a court of law. So we have to be able to go in and testify to what we're going to be doing, what we found in our investigation. And generally speaking, we want to testify to facts because facts are easy to prove, whereas opinions are hard to come by. And remember, when we're dealing with a fraud case, which is one of the things we do with forensic accounting, the determination of whether somebody has committed fraud or not is completely up to the jury. That's not a decision that we make as forensic accountants. That's a decision that the jury is going to make. So we need to consider that. So while we're looking at forensic accounting, how are we going to be looking at in some of the issues with forensic accountants? Well, one nice thing is that the Bureau of Labor Statistics says there's going to be an 11% annual increase in forensic accounting positions through 2024. What they're saying is that we need more forensic accountants. And I can tell you, having talked to some of my peers who own forensic accounting firms, other people who are partners and owners of the firms, they're looking for staff. There aren't enough people out there. And when we're looking at it, accounting.com estimated a 20% annual growth in the demand for forensic accountants. And one nice thing is that forensic accountants earn about 25% more than people who don't have the certifications as a forensic accountant. So that is one of the big pluses for those of you who are thinking about jumping into the forensic accounting field. One of the big advantages is you can make more money. There's an opportunity for money in the field, and there are plenty of companies out there that are currently hiring. Now, one of the things that we want to look at is what's the difference between forensic accounting and financial auditing, or forensic auditing and financial auditing. When we're looking at a financial audit, they're performed obviously by CPAs, and you're expressing an opinion on the financial statements taken as a whole. We're looking at the financial statements. Are they fairly stated with no material misstatements? Now, when an auditor is working on an audit of financial statements, they're not required to find fraud. They are required to set up their audit procedures to detect either errors or fraud that could lead to a material misstatement in the financial statements. So the easiest way to avoid detection by the auditors if you're committing fraud is to do it for immaterial amounts, because they're usually not testing for them, and there's no way to look at every single transaction that we've put on the books. Now, forensic audits or forensic accounting engagements, these are done by experts, and we're verifying information, determining valuations, looking for fraud, verifying compliance with government regulations or with contracts, also looking at loan covenants, and we're going to investigate and report on the issues. Now, we have limited scope. When we're doing a forensic audit, we may look at potential fraud in accounts receivable from January to July 2015. Very specific scope. We may not look at a whole year, or we may look at multiple years. We may be looking at fraud in accounts receivable for a 5-year period of time because we have a bookkeeper that may have been embezzling over time. But our scope of our audit is a very important thing that we have to put in place when we're doing a forensic accounting engagement. We want to make sure that we've defined the scope of our engagement so there aren't any questions later on is, did we do the work? Because one of the things that will happen, and I've had this happen several times when you get into the deposition phase of, you're being deposed by opposing counsel, and they're going to ask you, well, did you look at this? Why didn't you examine this? And they'll start throwing stuff out at you to make it look like you didn't look at everything that was possible. And of course, you can't look at everything that's possible because you don't have a budget for it. So the best answer, if you've scoped your engagement correctly, is very simple. That's outside the scope of my engagement. I wasn't paid to do that. And you want to word it that way specifically because when you get to trial, understand the jury, which is comprised of a bunch of people with usually just a high school diploma, and they're not going to have a good understanding of forensic accounting. So if you mention the word scope, they're going to think of mouthwash. So you want to say, I wasn't paid to do that, because trust me, everybody on the jury understands that if you weren't paid to do something, guess what? You're not going to do it. When we're working, we only do what we're paid to do.